This is how insurance works. In today's video, we'll explore the fundamentals of insurance and explain how it works. If you've ever wondered about the ins and outs of insurance coverage, this video is a must-watch. Insurance can sometimes seem like a daunting topic, but fear not, we're here to simplify it for you. We'll cover everything from the different types of insurance, such as health, auto, and home insurance, to the key concepts like premiums, deductibles, and claims. By the end of this video, you'll have a solid grasp of the basics. Have you ever wondered how to protect what matters most when life throws unexpected challenges your way? Well, today we've got answers for you. Welcome to our channel, where we're diving deep into the world of insurance. We'll unravel the mysteries behind insurance policies and help you make informed decisions about safeguarding your hard-earned assets and loved ones. Imagine having the confidence to choose the perfect insurance coverage tailored to your needs. By the end of this video, you'll be equipped with the knowledge to do just that. So if you're ready to take control of your financial future and ensure peace of mind, let's get started. What is insurance? In simpler terms, insurance is like a safety net. It is an agreement between a person and an insurance company. The deal is, if something bad happens to the person or their stuff, the insurance company steps in to help pay for the losses. Of course, there are some rules. The bad thing that happens has to be something the insurance covers, and the person has to keep making their payments. For example, let's say a house gets destroyed by a fire. Home insurance steps up and helps pay to fix it. Or if someone causes a car crash, auto insurance can help cover medical bills and damage to other people's stuff. And if a person with insurance passes away, their family might get some money from their life insurance policy. So, insurance is like a safety plan that gives you financial help when things go wrong, but you've got to keep up with your end of the deal by making payments. How does insurance work? Insurance can be quite different from one policy to another, and it depends on the insurance company too. But there are 4 main things you should know about all insurance plans to make sure you're getting the right protection. Premium. You need to know how much you have to pay for the insurance. Policy term. How long the insurance coverage lasts. Policy limit. The most money the insurance will give you if something bad happens. Deductible. The amount you have to pay before the insurance helps you. What is an insurance premium and how is it calculated? When you want to get insurance, there are a few important steps. First, you have to apply and get accepted. During this process, the insurance company checks how risky you are, which means how likely you might make a claim. Based on this, they figure out how much you need to pay for your insurance, and this payment is called the premium. Lots of things decide how much you pay. For car insurance, they look at your age, if you're a man or a woman, and how good your driving history is. Home insurance might cost more if your area has bad weather like wildfires, hurricanes, earthquakes, or floods. Life insurance can be cheaper or more expensive based on your health history and if you smoke. Once you're accepted, you have to pay your premiums regularly. You usually get to pick if you want to pay every month, every 3 months, every 6 months, or once a year. It's super important to pay on time because if you don't, it might affect your insurance when it's time to renew, or they might even cancel it. But hey, before we continue, we want you to know that we're always making new content, so make sure you like and subscribe to our channel so you don't miss anything. Types of insurance companies. Insurance might seem a bit tricky, but let's make it simple. Not all insurance companies do the same thing. They each focus on different things to make sure they can cover their costs and make money. Think about it like this. Imagine you thought only a few houses burned down every year, but it was actually more than you expected. If you insured those houses, you'd end up losing a lot of money because you didn't charge enough. So, insurance companies specializes in different areas like cars, health, life, or homes. You might wonder, why not just put your money in a bank instead of paying for insurance? Well, saving is good, but it means you take all the risk. For example, if you save money for home repairs and your house burns down, you'd need a ton of money to fix it. Not a great situation, right? That's where insurance helps you. You pay a company to take on your risk, so if something bad happens, they cover the costs. It's like sharing the risk with a big company that can handle it. Here's something interesting. Insurance can cover almost anything. Worried your toaster might catch fire while making breakfast? There's probably insurance for that. Concerned that a fall might mess up your looks and your confidence? Yes, you can get insurance for that too. Even famous people insure parts of their bodies because their looks are part of how they earn money. But there's more to know, like reinsurance, which is like insurance for insurance companies, and how insurance claims work. Let's dig into those topics to get the full picture. Reinsurance. Reinsurance is a kind of insurance that insurance companies buy from other insurance companies. They do this to stay safe from big, costly events that could lead to huge claims. In this setup, the insurance company buying the reinsurance is called the ceding company or cedant. The company giving the reinsurance is called the reinsurer. The reinsurer takes on some of the insurance responsibilities of the ceding company. This helps the ceding company lower its risks and stay financially stable after major events like natural disasters, think hurricanes or wildfires. Reinsurance is also used to reduce the ceding company's need for a lot of money in reserve, for tax benefits or other reasons. There are two main ways to do reinsurance: treaty and facultative. Treaty deals cover big groups of policies, while facultative deals are for specific, usually high-risk ones. Reinsurance is super important for insurance companies. It helps them handle risks better and means they don't need to keep as much money on hand to cover those risks. How do insurance claims work? The process of getting money from your insurance can be a bit different depending on your insurance type and the company you're with. However, there's a general guide that should work for most cases. Report the claim. Call your insurance company as soon as you can after something bad happens. They'll need to know when, where, and what happened. Document the damage. Take pictures or videos of the damage and make a list of things that got broken or lost. Also, keep recipients and papers that show how much your stuff is worth. Check your insurance paper. Read your insurance paper to see what they'll pay for and what they won't. If you're not sure, you can always ask your insurance company. Get an estimate. Someone from the insurance company will come and look at the damage. They'll tell you how much it'll cost to fix or replace things. The first check they give you might not be all the money, just some of it. Fix things for now. If you need to, make small fixes to stop things from getting worse. Keep the bills or the stuff you buy. Fill out the papers. Finish all the forms for your claim and send them back fast with as much info as you can. If you don't do it right, it'll slow things down. Wait for the money. Once they say yes to your claim, they'll send you some money. They might pay it all at once or bit by bit, depending on what happened and their rules. Remember to write down who you talked to and when, and save any emails or letters. If you're not sure about anything, ask your insurance company or someone who knows about insurance to help you out. Hey there, before we reveal the most important of this video, make sure to tap that subscribe button and turn on the notification bell. This way, you won't miss out on our newest videos. You can decide if you want notifications for just a few videos or all of them. It's your choice, and if you're using your phone, don't forget to enable notifications in your settings. Fraud. Insurance companies don't just hand over money when you make a claim. They check to make sure it's a real claim and not a fake one. There's a big problem with people trying to cheat insurance companies, and it costs them a lot of money every year, so they have special investigators to look into things. These investigators do a bunch of stuff like checking your background and your credit. They might even secretly watch you. They also gather information and evidence from where the accident happened. Sometimes they catch people doing dishonest stuff. Insurance companies hire really good investigators to make sure they don't make any mistakes. If they find out that someone is faking a claim, it's considered a crime, and that person can end up in jail. People can cheat insurance companies in different ways. They might pretend an accident happened when it didn't, or they might pretend they're hurt to get money from insurance. These investigations are done following the law to make sure everything stands up in court. And there you have it, a clear and simplified overview of how insurance works. We hope this video has shed light on the world of insurance, making it easier for you to understand and make informed decisions about your coverage. Remember, insurance is like a safety net that offers financial protection when life takes an unexpected turn. Now, are you interested in having your own insurance? Yes or no? Let us know in the comments section below. And as always, don't forget to hit that like button if you found this video helpful, and subscribe to our channel so you never miss out on our latest content. And for more resources and links related to today's topics, be sure to check out the description below. Thank you for watching, and we look forward to reading your comments and engaging with you in the next video. How to use life insurance to buy real estate. In today's video, we're diving deep into how to use life insurance to buy real estate. We'll explore the incredible potential of whole life insurance, its living benefits, and how it can help you secure your financial future while venturing into real estate investments. Discover the power of tax-free growth, residual income, and investment strategies that don't require a massive upfront investment. Whether you're ready to unlock your financial potential right now or seeking a low-cost entry into real estate, we've got you covered. Share your thoughts in the comments below. Your journey towards financial security and property ownership begins here. Ever wondered if your life insurance could actually help you become a real estate mogul? Well, get ready to have your mind blown, because in today's video, we're about to reveal some game-changing secrets that can turn your life insurance into a golden ticket for your real estate investments. So are you ready to unlock the hidden potential of your life insurance policy and discover how you can dip your toes into the world of real estate with it? Stick around, because we're about to dive into the 3 incredible techniques that will not only secure your future, but also make your property dreams a reality. What we're diving into today is using life insurance to jump into the world of real estate investments. Now, don't worry, we're not getting into all the different types of life insurance like term, index, or universal. We're focusing on a particular kind called whole life insurance, and it's the kind that pays dividends, which is essentially a share of profits from the insurance company. So why whole life insurance? Well, there are 2 big reasons. First, when you pay your premium, you're getting 2 important things. One is the classic death benefit. This means if something unfortunate were to happen to you, your family gets a payout. That's the traditional side of life insurance. Then here's the exciting part. You're also getting something called living benefits. These are perks you can actually use while you're still alive. Many people might not know about these because they're more familiar with term insurance, where you only get benefits if you pass away. Living benefits are all about the cash value. It's like a savings account that grows over time inside your insurance policy, and you can tap into this money, use it for investments, or even cover your everyday expenses. Think of it as your personal line of credit that's always there when you need it. Intriguing, right? Now here's the most interesting part. Even when you borrow money from it, your money keeps earning interest. The next important aspect to consider is why you should consider this strategy. There are a few good reasons for it. First, the money that accumulates inside your life insurance policy grows without being taxed. This happens because you use money you've already paid taxes on to purchase the policy. This means your growth is protected from taxes, and that's a big advantage. Moreover, when you combine the cash inside your policy with the potential growth from investing in real estate, it can be a strong contender against the returns you might get from your stock market. So it's a smart move in terms of investment potential. On top of that, the growth within your policy is guaranteed. This is significant because we prefer to place our money in areas where we have a certain level of assurance, right? Residual income. Let's talk about residual income. It's the money that keeps coming in even when you're not working for it. This is a big deal because we all want our money to keep growing, right? Well, here's the deal. We're getting this residual income from 2 places. First, our insurance policy is like a snowball rolling down a hill, getting bigger all on its own. And then when you invest in real estate, that can bring in more of that steady income. You see, the key is not just to stash your money in the bank. Banks don't keep your money sitting around. They use it to make more money. So what we do is we keep our money in our life insurance policy, and that cash value is what we use to invest in things like real estate. One more thing, depending on where you live, your life insurance is protected. If someone tries to sue you, they can't touch your life insurance. This is especially important if you're a business owner. So it's a smart move to use life insurance to park your money and make it work for you. Hey, before we continue, we want you to know that we're always making new content, so make sure you like and subscribe to our channel so you don't miss anything. When is the right time to have life insurance? Well, the right answer is right now. The key idea is to prioritize paying yourself first. What this means is that before you do anything else with your money, you should set some aside for your future. However, instead of just stashing your funds in a regular bank account, it is worth considering a life insurance policy with a focus on high cash value. It's like creating a new way to save for your future. You'll take your existing savings and put them into this policy, and you'll keep using your savings to fund it. So if you're diligent about paying yourself first, this option can open up new possibilities instead of just using your regular savings account for investments, which can deplete your savings and require rebuilding. Now let's talk age. The right time also depends on your health. People often ask if they're too old, especially if they're in their 50s or 60s. The good news is that as long as you're in good health, you can still get a life insurance policy. Even if you have some health issues or pre-existing conditions, there are options to explore, like insuring other family members whom you have a vested interest in. Lastly, it's crucial to make sure you can keep up with it. The more you can start with, the more you'll have in the long run. We generally advise not starting with less than $500 a month, depending on your age, to make it worthwhile and effective for your financial goals. How can we use life insurance to invest in real estate? Now, what if your financial resources are limited? To overcome this hurdle, you can use your initial life insurance policy for something called gap funding. This strategy came in handy when partnering with lenders. For instance, if a lender could secure a hard money loan covering 80% of a property's value, they still required the remaining 20%. To facilitate multiple deals, they collaborated with investors and provided the missing 20% as gap funding. As the money accumulated within your life insurance, it will become a personal cash reserve that you can use for real estate investments. Let's say that you only have $5,000 in cash value and this is not enough to buy a property, right? You can still fund your property through gap funding. This approach will assist other real estate investors by providing funds for closing huge costs and receiving interest in return. The key lesson here is that you don't need a huge sum like $300,000 to become a real estate investor. You just need to find your place in the equation. Another option to consider is purchasing a house outright with available cash. This approach can be especially attractive when the property comes at a low cost. However, if you don't have enough cash to buy a house outright, there's another route that you can explore. Using your life insurance policy as a source for a down payment. This tactic becomes more appealing when you have a buy and hold strategy in mind with the expectation of generating a steady cash flow from your investment. It's worth noting that it's not typically advised to have your policy cash for the mortgage on the house you live in. This is precisely why it's recommended that real estate investors embrace the concept of utilizing life insurance to venture into real estate investments. There's a different mindset at play here, distinguishing investors from consumers in terms of how they can multiply their funds and employ them to generate more wealth. Now, what are the 3 key ways to use life insurance for financial benefit? First, it can serve as a source of funds to cover various expenses such as closing costs or down payments when purchasing a house. Second, you can leverage it as a lending tool. For example, if you have investor friends who need financial support for their projects, you can provide them with a loan using your life insurance funds, creating a mutually beneficial arrangement. This means you don't necessarily need to be directly involved in the investment itself. Hey there, before we reveal the main takeaways, make sure to tap that subscribe button and turn on the notification bell. This way, you won't miss out on our newest videos. You can decide if you want notifications for just a few videos or all of them. It's your choice, and if you're using your phone, don't forget to enable notifications in your settings. Main takeaways. The main takeaways for this video revolve around 2 key points. Firstly, understanding the importance of obtaining a life insurance policy designed for high cash value. To achieve this, it's essential to manage and reduce existing debts to free up cash flow for investment purposes. Once you've secured a substantial cash value in your life insurance policy, you can use it to invest in various avenues, not limited to real estate, but also to cryptocurrency or the stock market. This approach can significantly accelerate your financial growth as your investments work in tandem with a compounded value of your policy. In essence, it's about amplifying your financial gains and using life insurance as a valuable asset to secure a more prosperous future. Next, in life insurance, the money you have doesn't grow on its own. It's because many people might not be familiar with how money can grow through a process called compounding. To make money grow, you need it to earn interest, and it needs to stay put, not moving around. What's interesting is that even when you borrow money from a life insurance policy, the money left in the policy continues to earn interest. This means you can benefit from compound interest on the money inside your life insurance policy while also using it to make more money through a real estate investment. We've learned some invaluable insights today about harnessing the power of life insurance for your real estate aspirations. It's clear that whole life insurance, with its unique features like living benefits and the potential for tax-free growth, can be a game changer in your investment journey. The ability to secure residual income for both your insurance policy and the real estate investments is a compelling strategy that can help your wealth grow steadily. But the real question is, how can you start your journey towards financial security and property ownership? Do you want to secure your future and unlock the potential of your life insurance today? Or are you looking for low-cost entry into the world of real estate investing? Share your thoughts in the comments below. And as always, don't forget to hit that like button if you found this video helpful and subscribe to our channel so you never miss out on my latest content. And for more resources and links related to today's topics, be sure to check out the description below. Thank you for watching, and we look forward to reading your comments and engaging with you in the next video. Use a trust for your life insurance wealth strategy. In this eye-opening video, we'll explore the powerful strategy of using trust for your life insurance wealth strategy. It's a concept that the Rockefellers mastered to maintain their generational wealth. Now it's your turn to unlock the potential for your family's financial future. Are you ready to dive into the secrets of the Rockefellers and create your own legacy? Let us know in the comments below. Ever wondered how the Rockefellers, that legendary family we all know about, managed to keep the wealth train chugging for generations? It's a fascinating tale of secrets, strategies, and the art of building an enduring legacy. So what's their money-making magic? Want to find out the hidden key that unlocked their generational wealth vault? Then you're in the right place, because today we're diving deep into their secret sauce. What if I told you it involves more than just money? Intrigued? Let's unlock the mystery together. The Rockefellers are among the richest families globally. It all started with John D. Rockefeller, who created Standard Oil in the late 19th century. Can you believe that 19th century? What's even more interesting is that even now, the Rockefeller family is super rich, and they are still a powerful force in American society. So how did they manage to do it? We've got two important things here: life insurance and a trust. First, life insurance is like a safety net. Imagine you have a family, a spouse, and kids. Life insurance can be a big help. It can cover things like the home, childcare, and school costs. It can even help with the bills when you're not around. But it's not just for families. If you run a business with a partner, life insurance can keep it safe if one of you is no longer here. It can also give your employees some financial help in case something happens to you. Life insurance is like a financial backup plan for life's unexpected twists. Now let's talk about the trust. Think of it as a set of papers that someone you trust, we call them a trustee, will take care of. These papers have your wishes written down, so when you're not here anymore, these instructions will make sure things happen just as you want. So here's the plan. We combine life insurance and a trust. We start with life insurance for someone, let's say a dad. If something happens to him, the money from the insurance goes to some people like X, Y, and Z. But here's the thing, the dad gets to choose who those people are. It could be the spouse or the kids, whoever he thinks should benefit. Now imagine if the insurance pays out a big sum like, say, $5 million. If you just give all that money to a young person, it might not be the best idea. Your children might not know how to handle that much money. So here's where it gets smart. Instead of giving all the money at once, we use the trust. The trust makes sure the money is used wisely. It can be used for important stuff like business, real estate, or making a positive impact. This way, the money keeps growing and working for your family. And when the dad isn't around anymore, the money goes into the trust. Then it can start a new policy, maybe for his kids. This way, it keeps going from one generation to the next. It's like a waterfall of wealth that never dries up. Hey, before we continue, we want you to know that we're always making new content, so make sure you like and subscribe to our channel so you don't miss anything. Imagine if you're a 20-year-old and suddenly someone hands you a whopping $5 million. Now, how many 20-year-olds out there do you think can wisely use that money to make it grow for themselves, their family, and even for future generations? Well, truth be told, not many can do that. It's a pretty small number. This is why we often hear about college students or professional athletes who receive big sums of money and end up broke. They just aren't taught how to handle their wealth. The same goes for lottery winners. They too often find themselves in financial trouble within a few years. It's because there aren't enough people educated on how to manage such wealth. And even if they are educated, there are still many challenges, especially when you're young and trying to figure out how to best use that money. Now, if you happen to be older and wiser, let's say you've been around for 60 to 80 years and have learned the ropes, you can take action to ensure that your wealth is put to good use. You can do this by setting up a trust. In this trust, you outline your wishes for how the money should be used every year and at different ages. You also specify what can and cannot be done with it. Now here's the magic. You make the trust the beneficiary. So when you pass away, the money doesn't go directly to your family, it goes into the trust. This way, you ensure that your wealth continues to benefit your loved ones and future generations, all while following your well-thought-out plan. When someone, let's call them the father, passes away, their money goes into something called a trust. This trust is like a special container for that money, and it's ready to be used. Now that you've decided on what you want to happen with this money, you want to use it to start something called a policy. Think of a policy as a way to save and protect money for your family's future. So who do you want to benefit from this policy? It could be your son, daughter, or any of your kids. Imagine each kid as a little pot where money will be kept safe and grow. Let's say you have 4 kids. That means you'll have 4 policies or 4 ways to save and grow money. These policies will be like a legacy for your family, something that keeps going from one generation to the next. Now here's the interesting part. We all have a time on this earth, and eventually we pass away. When that happens, the money from these policies we talked about earlier goes into the trust. It's a way to make sure the money is safe and is still working for your family even after you're no longer here. So, you see, the death benefit, which is just the money from these policies, goes back into the trust. That's because you decided that the trust should be in charge of it. In simple terms, you're creating a plan to make sure your family always has a safety net. Even when you're not around anymore, it's like passing on a special gift that keeps on giving to your kids and other kids and so on. That's the idea behind it. So when those 4 people pass away, they're going to pass on their money to their kids. These 4 people have their own kids, so now there are 16 kids in the picture. All of these 16 kids will have a special fund called a trust. This trust will also have life insurance money in it, and when these kids eventually pass away, their life insurance money will go back into the trust. This cycle just keeps going on and on. Hey there, before we reveal the rules about how the money can be used, make sure you tap that subscribe button and turn on the notification bell. This way you won't miss out on our newest videos. You can decide if you want notifications for just a few videos or all of them. It's your choice, and if you're using your phone, don't forget to enable notifications in your settings. Now, this trust has some rules about how the money can be used. It says, hey, you can only use this money for things like business, real estate, making a positive impact, and creating more wealth. This is powerful because we have 4, 16, 32, even 100 people in our family who are all out there making a difference. When you make a difference, you add value to the world, and that's when something cool happens. Money starts to follow that value, so you've basically created a big group of people who use life insurance and borrow money from it to build more wealth in real estate, help charities, and in many other ways. It's like a circle of wealth keeps coming back to benefit you and the trust. Alright, here's the deal. When you're no longer here, the money from your life insurance doesn't just disappear. It's like a continuous loop that keeps things rolling. So let's break it down. When someone passes away, their life insurance money can pay off any remaining loan on their policy. And guess what? That money can be used to kickstart new policies for the next generation, like your kids or grandkids. This process just keeps going, creating a kind of money circle that never runs out. The goal is to build up wealth over time by using these policies for things like real estate, starting businesses, and seizing opportunities. So even after you're gone, your life insurance can keep working for your family. It's like a never-ending waterfall of financial support, and it's pretty amazing how you can set this up to change your family's financial future. It all starts with you. So there you have it, the incredible strategy behind generational wealth and the Rockefeller's money magic. It's a system that keeps money flowing even after you're no longer here. But now we want to hear from you. Are you ready to explore how you can set up a plan to secure your family's financial future just like the Rockefellers did? Yes or no? Let us know in the comments section below. And as always, don't forget to hit that like button if you found this video helpful, and subscribe to our channel so you never miss out on my latest content. And for more resources and links related to today's topics, be sure to check out the description below. Thank you for watching, and we look forward to reading your comments and engaging with you in the next video. Get rich with life insurance. Here's how. Get ready to discover the secrets to financial success with life insurance in our latest video, Get Rich with Life Insurance. Here's how. We'll reveal some smart strategies to help you build wealth and secure your family's future using life insurance, plus explore some key tips and variations on how life insurance can be your path to financial freedom. Join us for expert insights and practical advice in this eye-opening discussion about getting ahead with the power of life insurance. So don't miss it. Had enough of banks running your life? Well, brace yourself for some game-changing news. In this video, we're about to drop a financial bombshell that'll totally reshape how you see your money. Wave goodbye to those awkward bank loan requests and say hello to owning your financial destiny. Get ready to unlock your financial superpowers. We're going to show you how life insurance can help you stack up real wealth. You'll be in charge of your own money fortress, calling the shots in your financial future. So stick around till the end and we'll hand you the keys to unlock your path to financial success. Trust us, you're in for a ride that'll make you richer than your wildest dreams. Your financial future is just a click away, so don't miss your chance to transform your life. They say most people think of life insurance as something that only helps when you pass away, like a gift for your family. But guess what? There's a secret part of life insurance they rarely talk about. It's called a whole life insurance. So what is whole life insurance? Whole life insurance is a special kind of lifelong insurance that stays with you as long as you keep making payments. What's cool is that it has a savings part, like a piggy bank, that can grow over time and can be used while you're alive. It's like having insurance and a little money pot all in one. So you're covered and you can watch your savings grow. As Dave Ramsey said, if you don't have insurance, you're gambling with your future. Also, it's even better because it's your own bank. See, people usually think that saving money in things like 401k or IRAs, they put their money in there and can't touch it until they're pretty old, like almost 60 years old. It's like saying goodbye money, I won't see you for a long time. Now, life insurance is a bit like a superhero piggy bank. You put money in it and grows just like in those 401k and IRA things. But here's the cool part. The money in your superhero piggy bank is guaranteed to grow, unlike those other things. Here's the best part, you can borrow money from your superhero piggy bank whenever you need it, without any penalties. So if you want to buy a cool house or start a business, you can use the money from your superhero piggy bank. So instead of giving your money to other people to hold on to, you keep it for yourself in your superhero piggy bank. You can use it to buy cool stuff or make your dreams come true. In a nutshell, life insurance may seem like a boring expense, but it's like having a secret power to help you get rich and make your dreams come true. Now let's dive into the fantastic benefits of whole life insurance. These perks make it a pretty sweet deal. Number 5, death benefit. This is the money your insurance company pays to your loved ones after you pass away. It's a part most people think about when they consider life insurance, but it's actually the last reason to get it. The death benefit acts as a safety net in case of unexpected tragedies, giving your family peace of mind and ensuring that your hard-earned wealth stays within the family. But remember, it's just one of the many awesome benefits of whole life insurance. Number 4, dividend accumulation. The policy's cash flow can grow over time, accumulating dividends at a rate of about 2 to 3% as your policy matures. You can use these dividends for things like cash withdrawals or reducing your insurance costs. They can also be used to buy more coverage or invest in other long-term goals. This gives you control over your policy's growth and management, essentially making you your own financial boss. Hey, before we continue, we want you to know that we're always making new content, so make sure you like and subscribe to your channel so you don't miss anything. Number 3, tax-free growth. Investing your money in regular ways like stocks and bonds means you have to pay taxes on the money you make every year. That includes taxes on the money you get from stocks and the interest you earn on bonds. These taxes can eat into the overall profit you make from your investment. But there's another option, whole life insurance. With this, your money can grow without being taxed. That means you only pay taxes when you take your money out of the policy. This can give your money more time to grow, especially if you're planning to invest for the long haul. In a nutshell, whole life insurance helps your money grow faster because you're not shelling out taxes every year. This tax-free growth can be a big plus for your long-term financial plans. Whether you're saving for retirement or your kids' education, whole life insurance is worth considering. It could help your money go a lot further. Number 2, policy loans. When your cash value builds up, you've got options. You can surrender the policy for the full payment, partially withdraw while keeping your coverage, or here's the cool part, you can borrow from your cash value. This way you're still covered and you can use the cash value for important purchases. The best part is that the interest rates for these loans are usually much lower than what you'd get from a bank. So it's like you become your own bank, making borrowing for things like a car or home a breeze. And at number 1, guaranteed returns. Unlike other investments like stocks or bonds, whole life insurance gives you guaranteed returns every year, typically around 3%. These stable returns provide a steady source of income and give you peace of mind. Some insurance companies even offer cash bonuses or interest-free loans to policyholders when they hit certain milestones or pay a certain amount in premiums. These extras add more value to your policy. You see, while whole life insurance is like a treasure chest that grows over time, and this growth can keep up with rising prices by itself, but don't fret, it's a fantastic tool for building wealth. If you use it wisely at its core, it's there to protect your loved ones, but also a secret weapon to boost your net worth. Hey there, before we reveal how life insurance can help you get rich, make sure to tap that subscribe button and turn on the notification bell. This way you won't miss out on our newest videos. You can decide if you want notifications for just a few videos or all of them. It's your choice, and if you're using your phone, don't forget to enable notifications in your settings. Now here's the deal. One smart way to make your money work harder is by borrowing from your policy and investing it in something profitable. You can use the Bank of You to get cash for, say, buying an investment property. You're far better off borrowing from your insurance than from big banks like Wells Fargo or JP Morgan. When it comes to seizing investment opportunities like real estate, you've got choices. The old school route is begging banks for loans, but the clever way is borrowing against your insurance cash value. This approach has a lot of perks: lower interest rates than most lenders, no need for credit checks and tax-free access to your money. And the best part, no obligatory monthly payments. You only pay for what you use, giving you the freedom to keep your money invested for as long as you like. The opportunity cost is practically zero when you go to the Bank of You way. Whole life insurance offers quick access to your cash value, whether you withdraw it or borrow from it. You can spend that cash however you want, whether it's on an investment property, a new car, a business, or even self-improvement. It's better than dealing with traditional banks. Your money is readily available at one of the market's best rates. So, if you crave control and flexibility over your finances, whole life insurance might be your perfect choice. Why rely on Wells Fargo, JP Morgan, or conventional banks when you can become your own bank with a Bank of You? It's time to take control of your financial destiny. So, there you have it, the financial game changer you've been waiting for: whole life insurance. Imagine having your own superhero piggy bank that grows your wealth and allows you to chase your dreams without the hassles of traditional banks. Are you more excited about the guaranteed returns and stable income that whole life insurance can offer, ensuring your financial security, or are you leaning towards the freedom to borrow from your policy for those life-changing investments without the complications of traditional loans? Let us know your choice in the comments below. And as always, don't forget to hit that like button if you found this video helpful and subscribe to our channel so you never miss out on my latest content. And for more resources and links related to today's topics, be sure to check out the description below. Thank you for watching, and we look forward to reading your comments and engaging with you in the next video.